Welcome back to the crusade. Woo! Man, there is so much happening right now. The Pruvex sacrifice phase is over. Now, what is happening with Pulsechain? As you can see, we have completed this pattern. We have completed the pattern. Is it enough? Is it enough? Will we see some bread getting pumped into the system right now? We spoke about this first arrow, which you could say was this dump here and here, which failed, which means this was invalidated. And then we had the other arrow, this, the deeper retracement, which you could say was this one here. I mean, it almost came right down to that point. We had the breakout, a slight confirmation of the breakout, very slight. Maybe if we go down the time frames, it'll be more apparent. There you go. Slight confirmation of this resistance turning support. Nice stepping formation. And as you can see here, we've got the golden cross. We have the golden cross. Will it hold true this time? You can see here, it couldn't hold it. So it was invalidated. But I'm going to call it that I think this is the bottom. I think this is 4 zeros, 1, 2, 4, 9. I think was the bottom. I think the bottom's in. One reason for that is because of the Pruvex sacrifice phase is ended now. So probably within a week or two we'll start seeing whatever that means, whatever that does. Right. Hex. You can see Hex is just absolutely being crushed. We've got $1 million of liquidity here. $1 million of liquidity. I think it went down to 860k. So again, is this the bottom for Hex? Well, you can see the volume down here. Volume's kind of falling off a cliff. It's crazy. But when it goes sideways like this, the volume, it normally means you're due a big retracement, especially for this. We've been gone down since the 30th of July. We dropped 85%. 85%, man, for the 30th of July. Now, remember, I said it goes down like this for ages, for like half a year, and then quickly it recovers. Like this is a prime example here. So, for the top of that point there, which is here, to there, we had an 87% retracement. 87% retracement. And that took, should have checked that there. How long did that take? Roughly 182 days. It took 182 days and retraced 87%. 180 days. And then it increased 460%. 466%. It increased 466% in 28 days. You see that? See, obviously your increase is going to be far greater than your decrease. Alright? So, here, you know, like I said, we've been going down since 30th of July. Took 150. Wow, that's been nearly half a year. That is crazy. 156 days that's been retracing for. Now, if you say, right, it will be another 28 days increase again, the same as over here, and it increased 460%. That would put, see, even if it went 436%, that would put us right in line with this diagonal trend line. Now that diagonal trend line is for the first kind of all-time high, well, the all-time high, projected down onto the points here. I just kind of, I wanted to hit this point here. The price isn't high enough yet to project it against here, right? For a line for here to here, and it'll be like here. Let's just do it. So you come up here, click that wee arrow, click ray, come to that bit there, it's a magnet. It'll latch onto the top of there. See how you can swing it about now. Bam. So there you go. That's how we got that. And as you can see with the other ones, I mean, it's quite, like when it's projected to here, a lot of points hit here, massive traded area here, and then it would have been coming down here, obviously when none of this was here. So it was a good indication of where the price was going to come up to. Price came up, kind of traded underneath it, and then eventually broke out of it. Tried to make it to this trend line, didn't make it, and now we've been trading around this trend line, the center one, for half a year. So, if you're being conservative and say, right, we'll get another, well, we'll have to take it for the low, because that's what we've done with the last one. So for here, in fact, we could show you something else. So the last time it took 28 days. So if you say, right, oh, it's going to take 28 days again. Right in line. 470%. So it's a wee bit higher, but even if it was a bit lower, it doesn't matter. It makes sense, right? That the price is going to, the next pump, it's going to come up to this trend line here. In 27 days, you'll get that. Will that happen again in the same time frame and the same percentage increase? Well, obviously we don't know, right? That's just speculation. But it could happen, obviously. Like it's happened multiple times, and the chances are it's going to happen again, and it'll be a lot more violent. So even if you say 66 days, or if you double it, right? So if you say like, well, yeah, 60 days. Last one was 28 days, so say like 60, 61 days. If it kept increasing for 61 days, then you would say the price could be roughly 845% increase. Unless it just goes sideways for 28 days, you know what I mean? But normally when you have a retracement that lasts half a year, similar to back here, you have a massive increase. You know what I mean? Like you can go back to any retracement here, and you'll see it went sideways, and then you had this big pump here. So for the top there, it retraced down to the lowest point here, 80%. It went sideways for a bit, so 94 days. For that retracement to the point where it broke out, it took 94 days and retraced to that point, 73%. And then, in how many days was that? 7 days, it increased 175% in 7 days. So, I mean, coming back to where we are now, it's like, right, so what's going to happen? Well, we've decreased for like 156 days or something, 159 days. Which is like double what that was. And that got massive increase back here. A wee bit less of an increase than back here, but more of a percentage increase. And you increased 450% roughly. Just to that point, but if you held, obviously you're up like 10x nearly, 9x. $8x, 786%. So yeah, back up to here. First target is this trend line, the center one, which would be like 0.01, roughly 0.11 cents. And then pumping up to here like 0.2 cents. So yeah, you know, we just got to wait and see now. Your target's been hit. Your retracement target's been hit for Pulsechain. Look at that. Getting a slight retracement. I kind of feel like this is either going to come down here like this and then just keep stepping up again. Probably something like that, maybe. I don't know. Okay, we're just making this up as we go along. I mean, if it can't hold this area, if it can't hold this, then I'll just do what it's done back here. It'll come down like that, probably come up, and then lose momentum and kind of roll back over, maybe double bottom out of that. But I didn't see that happening, so we're not even going to keep that on the screen. I think this is the bottom. I think this is what's going to happen. Obviously, if you're new here, you're probably thinking, yeah, but your lines didn't match up. You know, this yellow arrow it's not exactly done exactly that. Yeah, exactly. But when I drew this arrow, it took like 30 seconds. But you can see it's followed it pretty well. You know, we had the first retracement and that invalidated, and then it bounced at the second retracement, which was the second arrow here. So this is what I'm seeing. This is roughly the pattern I'm seeing. So where could Pulsechain go? I mean, we would just do the exact same as we done with Hex back there. You would just look at any retracement we had previously, and you can see it's the exact same without me going in and measuring it on showing you it, because it's, you know, it's going to be what I'm just telling you right now. Goes down for roughly half a year, like 80% retracement, and then pumps 150%, dumps 50%, and then another pump 110%, I think that was. So again, it's like 300% increase roughly. And that's in like a quarter of the time of what this retracement took. Same again here, this retracement, dropped, went sideways, pump, and you had this big this increase. So yeah, I mean, obviously if it pumps out of here, your next highest traded area, probably here, where it tried to break out again, comes to here, which would be roughly in line with this 200-week moving average. Break out of that, and then it's back up to your next traded area. So what we could do, horizontal raise, that's your second target, that's your first target. That would look something like what we were saying earlier. You know, kind of step up like that. That'd be your thing we trade it, maybe drop a bit and then pump up. That's kind of what we're looking. That's probably something like what I'll do, and it looks kind of like a hockey stick because he loves the hockey stick pattern, you know what I mean? Or it can do what E-Hex done. Now if any of you were here during E-Hex, it was crazy, man. It was crazy. I'm on my laptop, so I've not got my mouse. Taking a wee minute. E-Hex, whole different market back then, right enough. You know, come up, pump up, and then E-Hex done things like that. And then massive increases. It was like that. And it just started, the chart, the original chart just started getting dwarfed. It's like massive increases and then massive retracement, and then it pumped to all-time highs. I think when it does this though, when it gets to all-time high, you'll get something like this. You'll come up to all-time high and then you'll probably have like an 80% retracement. You can go back and check EHIC. In fact, I'll show you. Yeah, 80% would put you back right, almost in line with this second price target. See that, the green line here? That's probably what will happen. I'm going to show you that on EHICs. So many shitcoins floating about in this thing right now. See that? So when EHICs launched, you know, see here, you pumped quite a bit above. That was your all-time high here. Price came up, pumped above all-time high, came back down, tested all-time high as support, broke back out, and then had your retracement. And even back then, it went lower. It created a new lower low before doing crazy numbers. So this is the thing, your best, so when you come up to all-time highs like that, you're best taking small profits, just small profits, like 5% of your portfolio. You know what I mean? Locking in some of the profits, so when you have these retracements, you can buy back in. See, massive pump again, massive retracement, and even then, look at that, right back down to all-time low. People that have been holding all this time and then you didn't take profits and you're back to all-time low, you'd be fucking raging. So taking profits is important. No selling the whole bag, just small profits. If you've lasted this whole bear cycle in Pulsechain, you didn't want to just round trip the whole thing, right? So taking profits is a skill. Right, like a skill, like holding through all the pain in the bear market. That was a skill. Now you need to change your mindset, and your new skill that you need to form is when to take profits. Because when the prices are pumping like this, you know, when you're getting, say we're doing here right now on Pulsechain, right, say that's us here, and then you get that 600% increase. Right, you want to take a wee bit of profits because it's going to retrace, right? 5% of your portfolio, something like that, 10%, whatever. Come back down, you know, wait on that 70-80% retracement, buy back in and just sit on your hands. Pumps again, 5%, 10% of your portfolio. Wait on it retracing, buy back in, hold it. That's the key. If you pump up here, you sell your whole portfolio here. And then you miss this and it comes back up, again you'll be shitting yourself. And then you're getting killed with slippage fees and that. So you want to be taking very small profits of your portfolio along the way on these massive percentage increases, right? And I'll be here the whole step of the way, just trying to give you a bit of advice. So thanks for tuning in. I love you all. Peace.